Hello everyone, it's Nathan, Ultimate Traders on Reddit. So I'm coming to you with one other video. The question, I'm actually getting these questions a lot from some of my followers, because some of my followers do have the stock that's going to have a big vote coming next month to release shares. Now, like I said before in previous videos, posts, especially on YouTube, I need to try to get followers before I get anything negative. So I'm not going to be saying symbols, but I'm just trying to go over what happens when a company needs money and what happens when you have a company that makes money. Once again, like I said, I'm going over this because I am a little concerned. I do have a lot of followers that are playing with this company, where the company doesn't have money and is about to release a flood of new shares, and they've been doing it almost every 6 weeks since November. But for the sake of not getting any enemies, I don't want any enemies. I just want to try to tell you what happens when a company doesn't have money. So without naming the symbol, I'll go over a little bit about a situation just so you see what I mean. So this company, well, hypothetically, this company has about $300 million as of March 1st. Now, right now, we're on April 10th. Now, if you take a look at financials, and financials are very important if you want to do swing trading or long-term trading. If this is a day trade and you want to be in and out the same day, financials don't matter. But a lot of my followers and some other people are holding this long term. So what happens here? So this company has about $300 million as of March 1st. If you take a look at the cash flow, cash burn is $100 million a month. So which means is every single month, in terms of bonds issued, in terms of business that's generated right now, they're losing about $100 million a month. And they have $300 million of cash left. They do have quite a lot of debt also, but they have about, like I said, $300 million in cash left as of March 1st. Now, what's going to happen is when the vote comes in May, if your company doesn't have cash to run their business, cash to pay off their debt, they have to announce bankruptcy. Because I'm not sure if you're familiar with the way bankruptcy works, but if you're a person or a company, as soon as you can't even pay $10, let's say you only owe $10, if you can't pay the $10 back in liability, you must announce bankruptcy. And if you're a stock and you announce bankruptcy, that means their symbol is going to have a Q at the end of it. And I would say at least 95 to 98% of the times, when your stock has a Q at the end, the new entity, which is the creditors, normally do not allow the stock to continue trading after several months. They form a new company, whatever the case is. What I'm trying to say is this company is in dire need to release those new shares. So I know a lot of people are wanting to vote against that, because at the same time, if you do vote yes that they could sell new shares to the market, the bad thing is if they do not sell new shares to the market and their business doesn't pick up, you are trading a stock that's going to have a Q. It is better to trade a stock even though it's going to be super diluted and they're going to sell more shares, because the company, like I said in another video, the company and the stock are separate things, completely separate things. The stock could be way high because traders are trading it, but the condition of the company is not very good. Anytime you want to see health of a company, although I'm going to tell you at least 99%, that's a 1 out of 100 traders, and probably even lower than that, actually checks the bonds traded. So what happens is almost every single tech company has bonds. Even Apple has bonds, but Apple bonds trade at like 2%. But in this instance, this company has bonds trading at 18%. That means if they borrow $1 million They are paying $180,000. That is very, very high. So just in order to pay back what they owe, they need business. Of course they need to sell shares. So what I'm trying to say is you must unfortunately vote that they release the new shares. And what I recommend, and this is just me, you know, don't sue me. This is what I would do. Remember, this is what I would do. So I would wait for another rally, because there was actually a rally last week. Sell into the rally before the vote next month. Don't look back. Do not look back. The stock could even double. Don't look back, because if it doubles, it's because you had an army, you had a herd, everyone was bidding it up. But what's going to happen next month when the company sells shares? Remember, this is an auction. When they sell, supply is going to double. So all the people that are backing the stock, you're going to need double those people to get the new shares. So that's what happens when a company has no money, and the stock is going through the roof. They're going to sell shares because they need money. Now, if you have a solid company that's making money and the stock comes down, they will announce a share buyback or do a special dividend like Rocket RKT. RKT makes cash. I love it. I love it. They make a ton of cash, and traders just hate the stock. So every time Rocket goes to like 20, 21, I just trade it over and over again. Now, a lot of people tell me, hey, why don't you do long term? Listen, on Rocket is trading like $22 roughly. I made over $20 in day trades. Okay, so that's why, like, I like the opportunity to trade Rocket at 21, 22, because I'm going to keep trading it and I'm going to make the long term. Listen, this week on Tiger, I have a trader in our elite trading group, Ultimate Traders of Reddit. We have an elite trading group. I don't know if he planned this or whatever the case is. This guy fell asleep 2 days while trading Tiger, which is super, super heavy volatile. Now, hats off to him. Tiger's $19, $20. This guy's made over $5 this week. So why long term? This guy in 2 or 3 days made 33% on Tiger. And falling asleep, mind you. I'm trading Tiger too. But no diamond hands here. Although he had no diamond hands, but he fell asleep. Woke up in the afternoon. Well, actually he was overseas. So not the afternoon, but hours later he woke up and took $2 per share like 2 times and traded again before. So he picked up like $5 or $6 sleeping. I'm there watching it and working and watching it on my phone, trying to track it, and I'm still trading it, but I'm making like $1.50. So when a company has money, we're going back to that, when a company has money, they can come to the market, buy shares, or give a special dividend. And that will increase the shares, the price of the shares. But unfortunately, Rocket came back down. Rocket did go up as high as 42, backed by an army of speculators. And Rocket should trade around 25 to 30, but it fell to my trading range where I'm going to come back in. So once again, the goal of this video was to tell you what happens when a company doesn't make money and they need money, especially when the share is high, and what happens when the share is low and a company makes money. All right, have a great Saturday.